Welcome. I am the FX Savant, and in this video, we're going to answer the question, what is the best time frame? But before we do get into that, make sure you do drop me a thumbs up, make sure you are subscribed, drop me a comment of your favorite pair to trade, and let's get right into it. The best time frame to trade, in my opinion, is the daily time frame. If I had to use one time frame to trade off of, I would use the daily time frame. The reason behind that is because it gives all participants the opportunity to input their bias or their opinion in on the market. So it gives everyone the opportunity to trade, which will encompass and give you the majority of what the decisions were of the day. Whether that be net positive, it'd be a green day, a green bar on the chart, or a negative day. Majority of the participants were selling that day. So the big banks and institutions, it will give you the majority outlook from the London session, Asian session, New York session, all of them combined to give you general consensus on how the market feels, on everyone's opinion of the market. So the daily time frame is going to give you what the majority of the participants in the market thought that day. So it's going to tell you where the money is going in a large majority by the big participants. If we truly understand something that I preach heavily on this channel, which is understanding structure, support and resistance, supply and demand, the actual understanding of those concepts, and apply that with what we can get and the information that we retain from the daily time frame, then it will be really game changing for you. If you don't already know this, and if you do, understanding this in more detail can only help. So watching this video is only good education and free education for any viewer watching this, and I think it is going to be very, very educational. So much so that we might even do a part 2, depending on how much you like it. So let's hop right into it. We have this right here. This trade, CHF JPY, was sent out. A nice 2R risk to reward trade. Entry in at 120.07. Take profit up here. Stop loss down here. So let's look at it. This is it right here. Stop loss at 120, take profit up here, stop loss down here. And now, if we do see why, we can send out this blah, blah, blah. Now, let's take a look as to why this trade was sent out. So if we drop to the daily time frame, so we're solely looking on the daily time frame. If we're not going to do our multi-time, usually we do our multi-time frame analysis starting with the monthly and going down to the weekly and then down to the daily. But if we had to choose just one, because you don't want to sit in these trades forever on the weekly time frame waiting for them to play out, or the monthly even longer, and just using our daily time frame. Let's go back. What can we identify? Well, if we take a look at it and look at the market, we can see that we've had a massive sell-off. We've broke several levels of structure. We had support here, support here, support here, support here, support here, support here. We've broken close below all those levels and came all the way down here. So we have then came back for a retracement, a little consolidation, understanding this pattern, and we've made this move to the downside. So we've had an impulse to the downside, we've had the retracement, and then we've had the start of what would seem like to be another impulse. But if we look at it just on the daily time frame, we can see something that I preach here, that we have structure. Where is our structure? Our structure is this previous structure support right in here. The market came up, broke above this level, came back for a retracement. We failed to break below. We found some support, and then we bounced from that level. We then broke below it, and we have yet to come back and retrace this level. On the daily time frame, we have previous structure support broken to the downside that if retested will act as resistance. Now we know the market can't go in one direction forever, so we need a retracement at some point. We don't just hop into this trade prematurely. We want to make sure that everything is in our favor. But if we do notice that we've had a green day on this candle, so we've had the majority of the participants in the market on a daily time frame basis, so each candle is one day, selling off. We've sold off majority of the participants during London session, New York session, Asian session. They all sales, big banks for sales. The next day, same thing. All the sessions ended up a majority negative. They were all selling. And then this next day we had a green candle, blue candle for me, and that just lets me know that all the participants had the opportunity to play in this market. And after I can see what they all chose to do, which was buy this market, I can see now that the retracement back to this level could possibly be on its way. And that's all from the daily time frame. So what am I looking for the following day going into this trade, going into this market? I'm looking for a move or some setup that I can identify with or find that goes along with the strategies that we use to look for an opportunity to exploit this knowledge that I just gained from the daily time frame. We didn't go to any other time frame. We stayed right here on the daily. So since this is a overall bearish market, we can't deny that fact that we've had this big sell-off. We've created a lower high, and then we've started to make moves to the downside looking looking to create a lower low. So we don't want to be in this trade forever. This is a counter trend trade, but we do have an opportunity that the market may come back and retest this neckline of this double top M formation pattern. I've spoke about it before. Once broken to the downside, we want to see the neckline retested, and then we want to see the continuation to the downside once again, because we're in an impulse retracement impulse phase, the most common pattern in the market. So we're just following the market and going along with what makes sense. We don't want to be in this trade for too long, so instead of the 4 hour, we're going to drop down to the hour, which is when we looked at this market and we saw, I think it was on this candle was the setup. Bada bing, bada boom. If we go over here, why was this the setup? Why do we have this setup here? Well, following the strategy and following the rules, if we go through what our strategy tells us to do, just in layman's terms, because I can't tell you the details of what we use to get into this market and identify everything, but just from a basis standpoint, just a basic understanding of structure and multi-time frame analysis, we can see that we've had a few patterns. Also understanding these patterns, that we've had this move to the downside, came back, break, immediate impulse to the upside, a little bit retracement, but then we had some sort of move to the upside here. So we do have an area right here that is acting as a level in the market, and if we do identify it and get pinpoint, we can probably say that it's somewhere right around in here, because we have the market that's came down into it, retested it once again, came back up, retested it once again, exploded from that level, broke below it, came back for the retest, stayed below that level, and then continued to climb and break above. So if the market wants to come back and retest this level, that it could be a possibility in order for us to see this move to the upside and continuation, because we then have a W formation that we don't want to see broke below the left shoulder or inverted. We'll then have an inverted head and shoulders pattern. You know, I love that pattern. We'll have the left shoulder here, head, then we'll have the right shoulder protecting us if the market wants to go ahead and explode to the upside. And then as well, if we do look at it from an immediate time frame, we have some sort of the same thing. We have the market moving down, making a move up, and then we're breaking lower with an explosion to the upside, where we could see the retest of what would be some not ideal, not perfect, not for any beginner, not with a trained eye, but we could see a move back in here before we see an explosion to the upside if the market wants to retest this level. So that's where we've gotten our entry. We've had a move to the upside, simply put. We've had a move to the upside, explosion to the upside, retracement, move to the upside. We just want to see a little more retracement before we continue to the upside to go ahead and fill in the rest of what this daily pattern wants to complete. So the most common pattern in the market is an impulse, correction, impulse, retracement, impulse, exhaustion, impulse, weak pullback, impulse. And every time the market retests previous structure broken and uses it as the opposite every instance. It's not perfect every single time, but it comes back to that level, and if it wants to continue trend, we'll use that level to continue the trend, and that's where the majority of the pips are made. But you can take advantage of these pullbacks if you do understand this concept. So we've got our entry, stop loss, but your stop loss isn't below the low, or my bad, FX Savant, FX Savant. What should my name be? What should people call me? We are savants, that's why it's called that, but I don't know, that's a good question. FX Savant, you don't have your stop below the low. What's up? You say you always put your stop below the low. You don't have your stop below the low on this instance. Come on now, what's going on, man? Well, to you, I would say that normally, yes, we do try to get our stop below the low, but in this instance, I wanted to get my stop below the 786 because we use logical thinking over here. So on this channel, we use things that only make sense, that can't be disputed. That if the market breaks below the 786, which is in our case, in my case, the way I use the Fibonacci is the last level of what would be some support. So this would be the last level I would like to see the market come into before I still had hopes that it could make a move to the upside. And if it broke this level, I then no longer want to be in this trade, because it would probably not be confirming my bias of creating structure to the upside, and it would be making moves and creating structure to the downside, which is in trend with the overall market. So on the daily time frame, we are bearish, but we're trying to take advantage of this counter trend move. So yes, we don't have the stop below the low, but we do have it stop below the lowest possible place I would like to see the market go before I would like to be out of this trade anyway. And this also is about as wide of a stop loss as I could get with my entry there and my take profit here for me to have an over 2R risk to reward. So a 2 or greater risk to reward. So a positive risk to reward. And that's that. So now that you can see, we've taken our take profit on higher time frames, which this is the area that we want to see the daily time frame come into before it continues trend to the downside. At least there's nothing left to do but to let it play out. Get a little retracement, a little drawdown, market comes back to the entry and then explodes to the upside right to this area. Now, if we look at it on a daily time frame, it's exactly what we want to see. Price broke below this area and then the market came back to retest previous structure broken, now turned was resistance, now turned support. So we had the market break above this level, come back for a retracement. Then we finally broke below it, came all the way down here, came back for a retracement right in this area. And now what kind of pattern can you identify from here? We have an impulse to the downside. We have a retracement. Now what do we want to see is another impulse to the downside, continuing the overall trend of our daily time frame. But that might be part two. I just wanted to go over that concept, that idea, and to try to sum up some things that people still may be struggling with. So you may still be trying to identify with a good time frame to use. I would say use a daily time frame in the way that I just explained it, to go ahead and find your direction, to look for setups like this. Just look for structure, man. Previous structure broken or previous structure yet to be retested. Look for the market to be a magnet to those areas, and then use that information to build some sort of strategy or entry system on your own that is profitable for you to take advantage of that. Because this sounds basic, but this is the way the market works, and this is how most of the profitable traders trade. I hope you have a profitable day on and off the charts. And until next time, I holla.